forth, guys. Now, what we're going to do here, guys, is simply go on a trading journey. This is day 2. Day 0 happened a couple days ago before the weekend. I think it was Friday or Saturday. But what we're going to do here is I'm going to basically trade. What's up, Dr. B? So I'm just going to trade as if I was a new trader. What you guys do, go along and do the things that you guys do. And basically, this way you can see how to improve what you're doing, maybe get some tips on how to be better at what you're doing and grow your skill level, because trading is a skill, right? It's not easy, but it is simple. So last time we were on, we found what we do is we go on YouTube just like everybody else, and you guys normally search like trading strategies, all these different ways to trade. So what I'm going to do is show you guys how to look up the world's best futures traders. So this lady here is currently the futures number 2 futures trader in the world, and we're going to go over her strategy, and then I'm going to teach you how to reverse engineer a strategy, make it your own, so that you can execute, right? Because the only thing that matters is you execute the trade properly. The only way you can execute the trade is you have to be confident in the trade, which means you have to understand the trade, which means you probably have to build it yourself. It's the only way to do it, guys. Don't forget to share the live, guys. Hit the likes over there. We need 10,000 likes. Welcome into the live. And we need to be active in here, so we need questions, stuff like that. If you guys are trying to, let me slide over here. If you want to get into more things, if you guys want to get into more things, if you want to, ask to come up, stuff like that. But let's dig into this futures trading style, and let's see if we can steal our first trade, right? So just to give you guys a reminder, let's head back over here. Look at that. So I think it's on this one here. Was it on the Doge? Oh, here it is. Okay, so just to give you a reminder, no matter what you do when you start trading, you can see right here we have this line here because that's where we're buying. But very first thing you got to do is set up your goal, right? We have a goal of 100K a year, 100K, right? Which means we need to make $1,786 a week. That means if we do 10 trades, we have to make $179 a trade. Or if we do 5 trades, we need to make $360. So that is just basically the goal. And that also gives us an idea of what we're trying. That's what the target we have to hit. So now we have to design everything around that structure. So the next thing you need to do is you have to build a trade structure, right? This is based on skill levels, percentages, and just the reality of trading, period. Is average traders, whether they're professional, retail investors, whatever they do, they win 4 out of 10 trades, right? So what this means is that's what we're going to go based on. Winning 4 trades, losing 6 trades, right? Because we're going to treat this as a skill level of 0. And then as we get better, the beauty of it is your gains will become even better and you'll make even more money once your skills get better. But we need to be able to hit our target of $179 a trade today. We need to be profitable today. So we don't have the luxury of, starting off losing. So let me show you guys how we do that. So now, the number 1 rule, right? So this is the universal laws, right? Let's see here. Let's get this set up here. Google. So when you put up the Universal 102 trading laws, right? AI says there's no official or widely recognized set called the Universal 102 trading laws. Well, we're launching it today. This is my personal journey where I'm going to teach you guys how I have been successful at trading for over 15 years, and how I will always be successful at trading, and how everyone who just simply follows my universal law, one law, you will also be profitable the very first day you start trading. Here it is. It's very simple. Okay. So here's what we have. So let's get back to our chart, and we're going to start off with this, right? Let me make a text. I'm going to do a little text message. I'm going to pop that in there, paste it in there. Okay. So we have our universal trading laws. Okay. And we're going to make another text there. We'll delete that one. I need this. And this is the basic right here. I'm going to delete it from here. We're going to put it in here. So the very first thing you need to do is write this down. Put Universal 102 trading laws. You're going to basically write this down. You can only lose 50% of what you win averagely per trade, right? So whatever you averagely win per trade, you are only allowed to lose that on the trades that you make. So that is automatically your boundary, right? So when you set a stop loss, the stop loss cannot take more money than that average. So let's say that every time you make a trade, you make $100. That means every time you lose a trade, you're only allowed to lose half of that average, which means that when you lose a trade, you need to be set up to where your stop loss is maximum $50, which would be half, but more consistently, you need to bring it down to almost like 80% of that. So we'd want to be around $35 of the 50 or $40 of the 50, right? Because you want to have wiggle room in there. Okay. That's what that means. Now, by following that universal law right there, we are going to put ourselves in a position that we are always successful. Okay. Now that we have these two things set up, we know the goals we want to do, 6 figures, how much we need to make, how many trades we need to make. Now we know the universal law of how we can set up a trade or what we're allowed to lose per trade because we're going to win 4 out of 10. So that's all set up. So now we need to set up our trade structure. Trade structure is basically, if we're doing 4 out of 10 trades, how much money are we going to do per trade? And what percentage are we going to use, etc. So for instance, if we do $1,000 trade and we do a 30x, that means that when we're going for a 1% move, an average of $200 to $300, which means our stop loss, or when we lose a trade, we can only lose $100. Okay, there, that's a trade structure. So now we have our boundary set up, our targets. So basically we have our goals, our targets, the law that we need to follow, and now we have the structure, the boundaries, and all the limits that we need to set up. Now we're doing what we're doing today, which is we need to find a trade strategy, right? So we're going to be day trading, so we need to basically average a 0.5% to 2% move with a 30x leverage will give us 15 to 30%, up to 60% on our trades. So that right there is, we have to find a trade strategy that is going to fit this move right there. So now that we have our trade structure set up, we have our trade structure of what we need to do to be successful. Now we have to go get a trade strategy, which we're going to do right now, guys. Don't forget to share the live, guys. Don't forget to share the live. Let's get everybody in here. Let me hit the Discord, because I go live here. Get on TikTok at Pam at what are y'all doing? See, people like, people want to get on after the market's shit, after everything's gone, after, all that stuff. But when the market's ready to go and there's hundreds of thousands of dollars to make, Everyone's slow to the game, right? And it gets a little annoying because I don't want to be teaching crypto when the market's crap and I want to go and like, swim, and I want to go enjoy myself, and I want to go, just kind of like get things done. You know what I'm saying? Like it's kind of like what it is, man. So what we're gonna do here is hold people accountable. Like, man, if I gotta wake you up, if I gotta I gotta get at you to become rich, wealthy, change your life. I mean, do you really want to change your life? I'm just saying. All right, so let's take a look at our trade real quick. So right now we're in a trade. So I need that. Okay. So we have a 20% win here, right? So we're just picking up the bottoms right now. So that's where we're at right here. So let's see if we have any margins just to make sure we're fully in here. Not a big deal. There we go. Let me run that up. Okay. All right, so that's going to be right there. Okay, so that's our trade. We're in there. We're moving our stop loss to positive. Now, we are profitable inside this trade, up 17%. We're going to move our entry up a little because if it goes wrong, we don't want to lose any money. Remember, the universal law that changes the game for you, which makes you a successful trader, is by simply understanding that you can only lose 50% of what you win per average, but you want to lose less than that and more. You want to get that down to half. So you want to cut that, whatever your average win is, half of that, you want to only lose half of that. And then you want to get to where if you do lose a trade, you're breaking even. So when you do lose trades, right, remember you're going to lose 6 out of 10. They're no money that you lost, right? Or you took small wins just to cover the trades. But that's where we're at right here. So now let's dig into YouTube. Let's pull up this video here. We're going to watch this.
This is a cold plunge tub, and it sells from $8,000 to $15,000. And this is an infrared sauna. It sells from $8,000 to $20,000. Both of these ship directly from the brand to the buyer.
Okay, so let's listen to how she's trading.
What time frame would you say this is based on?
So you can do this on any time frame, but I will say I like it better on the longer time frames. This is how I do think with trading, it's really important to establish a overall trend for the market. Like, like the daily SPX is in an up. The thing is, you want to ask yourself, this is what I would say. When the chart has its initial drop, it's up here out of reality in the Bollinger Band, and it has its initial drop, and you're waiting for the bounce.
Trading education is completely broken. For years, the industry has been purged and poisoned by bad actors, fake results, and strategies hidden behind paywalls. But in every industry, every once in a while, it becomes a catalyst. Forex, future.
What she does here is she has a pattern that she has where when it starts to break down, there's always
and
a
again,
bounce,
for identifying entry points when crashes, it is like so accurate, it's crazy.
That's the beauty, because obviously you can use it from a trading perspective, but then equally from just a long-term investing perspective, it can help two ways, whether you're looking to get good buys, right, or just being able to hold your long-term portfolio without too much stress, knowing that, okay, on average, this is the sort of area and benchmark we should be looking at for the pullback to start to slow down or stop and turn around.
Yeah.
In terms of your Bollinger Bands, do you have any particular settings that you use for that?
I just use the 2 standard deviations.
Gotcha.
Yeah, I think most of them default to that.
I think so, yeah.
Yeah, I don't extend them, but they are really helpful in kind of determining if the price is in reality or not.
Yeah, no, it makes sense. Like, you know how people use the RSI, for example?
Yeah.
Overbought, oversold. Obviously, the Bollinger Bands are similar in nature, but are working off the price itself rather than, say, a sentiment gauge. it's working off, as you say, the range. So the two standard deviations, as you said, is just expanding that range out. So once you go beyond that, the upper limit, lower limit, then like you say, it's out of reality at that point. So like silver, for example, and gold would have been way out of reality when they started to turn. But then, that's, a lot of people I think were not arguing, but loads of people were trying to time the short because they knew it was getting out of reality. And other people were trying to kind of put them down of like, it's bullish. Why are you fighting the trend and taking these losses? Because some of them are taking losses on the way up and they were getting a bit frustrated. But then a lot of people had like career high trades because they stuck it out and realized, look, we are our reality regardless. So this short is going to happen. And when it does, once you're seeing like mass greed or mass fear, but mass greed in that case, that short, when it does happen, is going to be very aggressive. And look what happened.
So really what they're talking about here, guys, is that they say they call it being out of reality. What that means is she uses the Bollinger Bands, and when a price, it's kind of like a parallel channel, the bottom at the top. But when a price gets to outside the Bollinger Bands, it becomes unrealistic. So what has to happen, basically all it is that once people get into profit and they find that there's no more volume in price action, they sell because the reality is there's no more buyers for the product. So they have to sell. It has to come back down to a price that's more realistic where people can say to themselves, well, if I buy it here, it can go back up to here. I can be profitable. Because once it's up here, what are you going to do? Where's it, when you buy it, where's it going to go to? So you always have to have the resetting of the price, the dip, the bounce, and people are always going to sell to take money. So once you understand that, you're going to stop holding positions and you're going to create a strategy where you target 30, 40, 60% gains, 10, 15, but very specific amount. That's why we have our targets of, $179 a trade, $360 a trade, because we don't need to guess or hold or have a feeling and try to run things out. But you also have ways to be in a trade and then set your stop losses and trail your stop losses and take whatever the market gives you. So you need to know that that's what you have to do, and then you reset your trade to when it comes back again. So that's really all they're talking here.
It was crazy aggressive, and it's probably not going to be the end. I'm sure there'll be a lot more volatility when it comes to those pairs, but it's a great example because I'm sure.
Guys, don't judge me on my bars, okay? All right. This would be a little risky. I would consider on going on a uptrend. So it went down. I like brutalize these. Okay, whatever. What I would do here is measure the distance from here to here. And this would tell me, hey, this thing went down. Then we got a little bounce. It pulled back a little bit. And the height it's going to go on the next move is from the high to the point on the trend line. And that's where you're going to find the next move goes to.
Exactly. So we'll take it from here down.
Yes.
And then essentially that would be the same to here.
Yes.
Which then when you're looking at it, is it a case where you're saying, okay, from here, this price movement makes sense to reach the upper sort of Bollinger Band in this case?
Yeah.
And this makes sense for me to be able to hold. Is it a case, let's say if that was larger and it's showing you that it'll probably get up here. When it comes to say managing your trade, especially I imagine in a long perspective, or maybe a short one might make more sense, but would you then say, okay, once we're starting to reach the upper band, that's where I'll start to scale out? Or no?
If the Lil Rizzy, right, had the distance, let's say the high was here and let's say the trend line was here, right?
Okay.
And let's say it brought us
much
the
bigger,
next move. I would play the whole move, even if it brought me out of reality, because they're that powerful that they usually tend to finish. And again, they're really just based on Fibonacci retracements. And I mean, you can look at these moves from like an order flow perspective. If someone pulled that up, they'd probably say that there would be like short orders, a bunch of people, and they coming in here trying to go short, and they would want to come in and play this move, or people coming in here in order flow trying to buy upward. So it's all the same thing. I think this is just a different way of looking at it that can be really easy for new traders. A lot of times the some of the other versions, there's just it can just be overwhelming. I really understand how to read charts very well. People send me their charts all the time, and sometimes I'm just like,
what's on this?
what are we doing? Buying when the green leprechaun crosses the blue frog? Like I don't get it. Like what is this? Like let's draw stars on it. Like, sometimes it's just too much.
No, definitely. So like here we have like 3 key principles really: the price action, a trend line, and the Bollinger Band. And just off those 3 key principles, you're identifying the trend, you're identifying an entry point, and you're identifying a target.
Yeah. So, and also, let's show this. If you get let me think of how to draw this. These are hard for me to draw. Okay. Let's say you got a candle. Dun, dun, dun. That came saying candle draw. I don't know. I haven't seen a bar in forever, so don't mind my bars. But let's say you get a move that came like all the way down here.
Yeah.
This is not a little Rizzy to me. Okay, it has to form on like a uptrend trend line. The second it comes like down, all the way down. If it stopped right here, okay. I could say if I look at the chart, there would be a chance. Let's say it stopped right here, and maybe I could draw the trend line right here. It could still continue on that high, but the second it comes like down below here, it's all bets are off. Yeah.
So then from here, obviously you would class it as sort of a break of that trend potentially.
Right.
And then the next for that pattern to form again, you would need, I guess, some green candles, and then do the same accordingly.
Right. So and then if something came like this. This would be a downward one to me, even though we're near the bottom. So let's say this one was, just to make it simple. Let's say this was the low. It would be right here to here.
Yeah.
And take it down.
So then it'll be from there to there, and then we'll be looking at the same move to the downside.
Yeah.
And then in terms of how do you then use this to try and identify the bottom in that case? Because then, as you said, if you were going to get to the out of reality, you'd still look to hold to that point.
Right. So what I would say is, like, if I was playing this little Rizzy right here, okay, my exit for a sell would be this move. If we said like it was, I don't know, to here, that would be my exit for a sell. The distance from the trend line to the highest high candle, and then take what, if that's $20, add it to the highest high, and that would be my exit for profit. Now my exit here for a loss would be if this trend line breaks. I might do it like below the low here, or I might just do it like, my only hesitation with doing it like real close, like right here, is a lot of times it will come test it and then just bounce. So I very much kind of like to wait for like an actual close.
Okay.
Like, so if the next candle like closed below this trend line, I would get out and say, okay, this is probably breaking here.
Okay.
If it's just, drastically pulling a silver move like the other day, get out. And kind of also always apply a max loss to all of your trades, however many.
Let's find out where so let's start here. This is where she first started. So let's go back
Information
to the beginning.
from what you've covered so far.
Let's get back to where she first broke this down.
222. Okay. We're going to show one like on the way up. Don't my sound effects. This is a mixed candle bar. You know what I mean? Okay. let's just say that blah blah blah. Guys, don't judge me on my bars, okay? All right. This would be a little risky. I would consider on going on a uptrend. So it went down. I like brutalize these. Okay, whatever. What I would do here is measure the distance from here to here. And this would tell me, hey, this thing went down. Then we got a little bounce. It pulled back a little bit. And the height it's going to go on the next move is from the high to the point on the trend line. And that's where you're going to find the next move goes to.
Exactly. So we'll take.
Here we go. Here's
Kind
where
of-
she kind of broke it down.
On the planet, all
Kind of
it's a completely personalized trading plan tailored to you and your goals. Reach milestones, redeem points, and earn rewards with a massive global community. Whether you trade Forex, futures, stock, options, or crypto, Chart Academy has something for you. Join the waitlist now and be part of a movement that is going to change trading education forever.
in actuality, hopefully you'll have a few candles up here that you could kind of get an idea where a trend line might be. And then when it starts to bounce, if you had this idea that you had these candles here and this was your trend line, you would say, hey, this one hasn't reached it yet.
Yeah.
No, not yesterday. On Thursday on X, I actually applied this on a 5-minute chart. And I tweeted it on purpose so we could talk about it here too. If we
really?
have time. And it was the same thing. It was a little risky. And I told everyone, you know, the market, watch out, it's going to turn here. And then it did start to turn. And then I set a price that I thought it was going to run to. And it was all based on this. And it ended up doing it. And it hit the price. And it's so simple. But you really have to, and we'll do it when we pull out the charts, you really have to like look at the charts and you have to kind of train yourself to see them over and over and realize they're constantly repeating. And I think we've all just learned so many complicated ways to trading. So sometimes you got to kind of like step back. And I think that's kind of what this is. So it might be hard for some people, but I think for like new traders, they would love this.
Yeah.
And again, for identifying entry points on crashes, it is like so accurate. It's crazy.
That's the beauty, because obviously you can use it from a trading perspective, but then
Yeah.
equally from just a long-term investment.
So
If you're an unprofitable trader, it's not because
go
you lack
ad-free,
discipline.
guys.
It's probably not because you're too emotional. It's because you've been taught retail methods that historically don't work well for most traders. Buying
Yeah,
at
I gotta
support
upgrade.
while institutions they sell into it. Chasing breakouts while they trigger false.
it is.
Like, I'm a new trader.
These are
here,
my
man.
candles.
I'm learning. I'm a new trader.
Ooh, I'm
All right, here's
Did I just-
her
is
here's
my
her
lotion
process.
gonna mess
So
that
let's
up?
No,
let's take this in real quick,
Okay.
and then
We're gonna get
break
some
this
red
down.
candles.
I'm gonna break this
Oh,
down
we're
for you
going
guys.
down. We're going down big. Get a doji. Okay. Let's do one more big one. Oh, they're getting killed here. I hope you were short. I hope you went short. Okay. Now we all see this over and over. And then look what happens. Have you ever seen a candle like that? Don't you feel like Silver had one of these? the
Yeah,
other
exactly.
day?
I was about to say,
This
yeah.
might be
Simple 1, 2,
silver.
3 move.
There'll be
What I
some
talk about
traumatized
all
people
the
with
We're
time.
making it dramatic so I don't have to draw 20 on the way down. Okay. So what happens here? Let me add a few over here too, just so we have this like choom choom choom. How are my candle skills?
No, they're great. Most people just draw lines, so I'm sure
No.
the audience
This
will
is something
appreciate
I
the
want
do all the
effort.
time. It's just a simple 1,
Okay.
2, 3.
Let's pretend this candle is not here. Okay. And all we have is the price data up until this point.
Yeah.
Okay. What you want to do is you want to come in and draw a trend line, right? Right here, down. And what you will find, there's a name for this, okay? I have self-taught myself all of trading. So a lot of these like specific names and everything, I don't even know what they are. So truly, I don't know what you would call this. But, you know, I was thinking to myself, there's a trader whose name we shall not say. Isn't he known for renaming patterns?
Oh, yeah.
And so we're going to rename this. And I was thinking we're going to name it after your kids. So we're going to call this pattern a Little Rizzy. Okay? So from now on, this is known as a Little Rizzy. So whatever, they're going to leave me comments and say, hey, it's called this. I don't care. It's called Little Rizzies now.
I'll back you up.
Okay.
As well, yeah.
You'll back me up, right? So what this is right here is a Little Rizzy. Okay? And the way that I look at this, and you will see this over and over in the charts, if you find the low on the candle that had the lowest low in this pattern, and you measure from right here to the top of the trend line, so you want to go directly up this same candle, right?
Okay.
To right here, and you measure the price distance. Let's say this is $20. What you will find is the next move down will be this distance. So like this would even continue further down.
Gotcha.
And this happens over and over and over. And I believe it is the basis for all of the charts. And what happens is when you're trying to identify a trend, you're going to see these keep forming. So I would view this as a new Little Rizzy that formed, okay? Draw a trend line from here to here. Technically, I would have wanted this one to come a little bit lower. Let's just say it came down here, okay?
Yeah.
And what you're gonna do is, this is how I judge if a trend is intact. If it keeps forming these Little Rizzies and it keeps going down and it keeps hitting these points downwards, and what you will find is I like to add like Bollinger Bands to it. It's intact. If it keeps forming these.
So basically, what we're dealing with is this. Just so you guys can kind of understand what we're talking about. Okay. So what this is that there's a trend that's going up. Then it has a candle that goes down. Okay. What happens is as it goes down, there's a level that it hits. She's measuring from that level back up to the trend line, and then taking this, adding it to the end of this, and once it goes back up and hits the trend line again, she expects it to come back down and retest that bottom area. Okay? And then once it does that, then it has an upward motion.
Little Rizzies, and it keeps going down and it keeps hitting these points downwards. And what you will find is I like to add like Bollinger Bands to it too. So for people that don't that aren't like familiar with Bollinger Bands, I'm gonna like, let's just okay, we're gonna pretend these are our Bollinger Bands. For people that aren't familiar with Bollinger Bands, because I know kind of the new traders these days don't use them, again, we're gonna like dumb it down here. I like to call it reality. Okay, so the middle line is like reality to me. If it's trading near the middle line, the price is like in reality. If it's up here, it's it's getting out of reality. If it trades above here, you're out of reality. So if you're out of reality, what happens? You have to come back down into it. So same thing here. If the price is trading near the bottom line, you're getting close to out of reality. When you come down here, like you're just out, you're gone. You're out of reality. At some point, mean reversion or coming back to reality has to take place. So when I use these Little Rizzies, I like when the first one happens towards the top of the Bollinger Bollinger Band, like up here or
so
above
like the top
reality
of the channel.
when it's going down.
Yeah. So
she wants
for the flip
short.
side, it would just be at the bottom side.
Right. So it will keep forming these, and you will find it. And when I pull up the charts and I
to
show, I want to
bottom.
go through 1929. We're going to go through 2000. We're going to go through 2008. We're going to go through 2022. We're going to go through 2020. We're going to go through 2025. It is going to blow your mind that this is so simple and looks so stupid, yet it can almost nail the bottom like exactly. It freaks me out still, like how accurate it is and easy to understand.
What she's talking about is that by doing that measure and putting it on the next one, that's giving her the bottom. And I'm gonna show you how to test this theory and this strategy so that you guys can understand.
But I mean, if you're looking at this, you can kind of tell this is kind of like you can kind of see, you're familiar with retracements, like,
Yeah.
like you can kind of see it's really a Fibonacci retracement. So that's where the power in it is coming from. But they will just continue on. And as I was saying before, I really like when they're towards, if it's going downwards, I really like when it's towards the top of the Bollinger Band or the middle.
Is my mic higher
And
now?
as the trend is fading, eventually it's going to start forming one towards the bottom that's not going to finish. But what usually happens is
So as you were mentioning, you mark out the bottom of that particular.
the lowest,
Yeah.
whatever candle has the lowest
And
low.
it's above there where you're trying to measure.
Where,
so,
you draw the trend line and you take the exact point in the trend line
it'll be the
on
measurement
that
from here.
candle.
To here. And so in this example, we said $20, let's say.
Right.
So then what you would be expecting is a $20 move below this area
Below the low.
based on that.
Yes.
Perfect. And for this example, I know it was already drawn on, but in this case, taking that same principle, would it be from this low to this high then?
No. Well, we're saying we're going to pretend this one came down lower.
Or just one more
All right,
candle,
so
yeah.
now that we got the gist
We're
of
going to
this,
pretend this is
I'm gonna
another.
put this video on hold. And we're gonna back test this real quick and get us ourselves in a situation where we can see what it's doing, right? I use the same strategy. Yes, brother. Marvin, what's up, Marvin? All right, and let me while I'm here, and I'm gonna make you a can I make you a I'll make you a moderator to their MBTG. All right, listen. So now let's back test this so we can see. Oh, you know what she didn't tell me was time frames.
The little Rizzy that just formed.
Oh, I got you. So you
This
get
is
the
the low.
lowest point.
The lowest point. This trend line worked the best.
Yeah.
The fourth one, the fifth one, the market's getting tired now and it's ready for a bounce.
So once we start to get
Right.
more out of reality
Right.
towards those edges, those ranges are going to get smaller
Right.
and start to fade away.
Right. And I use the Bollinger Bands
Mm-hmm.
to help me kind of realize how close and we are to reality,
Yeah.
how far out of reality we are.
What
I
time frame would you say this is based on?
So you can do this on any time frame, but I will say I like it better on the longer time frames. This is how I do think with trading, it's really important
Always.
to establish a overall trend for the market. Like, like the daily SPX is in an uptrend. So this is something that I would use for that. But there are times where I see these little Rizzies on like a 5-minute chart, a 10-minute chart, a 30-minute chart, and I'll take it. And my cue is when we start dropping, right? We never go straight down.
Oh, I missed
There's
it.
always a bounce.
Is it based on?
So you can do this on any time frame, but I will say I like it better on the longer time frames. This is how I do think with trading, it's really important to establish a overall trend for the market. Like, like the daily SPX is in an uptrend. So this is something that I would use for that. But there are times where I see these little Rizzies on like a 5-minute chart, a 10-minute chart, a 30-minute chart, and I'll take it. And my cue is when we start dropping, right? We never go straight down. There's always a bounce, right? We start dropping, I sit, I wait for the bounce. And when the bounce comes, I see if it's forming a trend line down, right? And if it does, then I'm like,
see, that's why you guys always hear me tell you short the bounce, okay? See, this strategy here that she just came across is the same strategy I've been teaching for 15 years, okay? This is why when I say to you guys, short the tops, short the bounces, this is what I'm talking about. So we're going to take this here. So she likes to use the daily to see which side of her trend is on by using the Bollinger Bands to see if she's in reality, below reality, which is just simply her way of finding volume or sentiment, which would be the same as saying if you're using an RSI or MACD to see if you're if you're exhausted or if you're just warming up, right?
like, we might be forming a little Rizzy. And so I might go short here.
Yeah.
And what I would be playing is, this $20 below here.
Yeah.
And that would be my exit point for a.
Okay, so now let me break this down. We're going to dig into here and let me show you what she's looking at. So first of all, I need Bollinger Bands. So let me see if I can. Here we go. We got them in here. All right. So now we got Bollinger Bands. Okay, so now all that Bollinger Bands are really doing here, it just allows her to kind of see if she's outside of the Bollinger Band, which is being exhausted, or if she's in the lower side of the Bollinger Band, where she would consider that she should be going up here, right? Very simple, right? We would also be using something called RSI. So we use the stochastic RSI. What's up, VC? What's up, K Torres? What up, baby? Don't forget the ones in the chat. Don't forget to share the live, guys. We're going to give you some juice here. I'm going to walk you through a trading journey that I'm going to personally do so that you guys can see it actually does what it's supposed to do. And I'm going to teach you something that's what no one else teaches you. Outside of YouTube and all these other things, everyone is teaching you basically their strategy, right? They're teaching you how they trade, the way they trade, and the steps that they trade. And a lot of times one trade does not fit all, and the only way to execute a trade to be successful is to understand how trades work and to find a trade that you can execute by being confident, which means you need to take a strategy, you need to reverse engineer it, tear it apart, and rebuild it so that your brain has the steps it needs to be successful. It's really that easy. So we have her theory, right? Now I'm going to show you guys how to build it here. And put it in there. K Torres. Don't forget to share the live, guys. Okay. So now what she does, this is kind of like when you're trading, getting yourself into a trading place where you have, the daily trend, right? What's happening, what's going to be happening, what the market is doing, etc. So this is where she would click on here. She would have her Bollinger Bands. She would look at this market right here, and she would say that when see this Bollinger Band, when these candles start breaking above these Bollinger Bands, she would say to herself that she's out of reality, right? But what happens is, here they were out of reality on the 20th, another day, another day, another day, right? So The reality is that we've been trading out of reality for a long time. We're just coming back into reality. So in her theory of breaking down which direction it's going, she would be expecting some type of pullback to the bottom of the Bollinger Bands where she would be looking to go long again. So she'd be looking for shorts here because, like everyone who trades, it would be considered that the market is overbought, exhausted, and people have to eventually sell in this top area so that the price can come back down to a price that the people who aren't continuously buying here have a good price where they can buy the dip and then ride it back up to the previous all-time high right here of the month and make money, right? So you have to create money opportunities. Now, we don't use the Bollinger Bands for that because obviously if we did, what would happen here is that you would, after this candle here, you'd be basically thinking to yourself, we're out of reality, and then you wouldn't go long here. You'd be looking for shorts. And if your skill level isn't correct, because what you'd want to be shorting, just to kind of give you a point here, is that every time you have a big move, you would want to short the top of these candles back into the Bollinger Bands. Right, so that's what this is. This is an added step I'm going to show you guys that you can start using, which is basically, it would be this. It would be this price back to this price, this price back to that price, this price back to that price, and then right now you would be shorting this price back to this price, which is going to be whatever the next candle is. Okay. And what I'm going to do here is I'm going to turn these greens into blues, just so we know that it's not a trade that we're looking at now. It's just the highs and the lows that you could have traded into, just kind of like trading that was called a you know, when they talk about consolidation, right? So when a trade consolidates and gets into a parallel channel, it goes to the top and the bottom and it bounces back and forth. So let's take a look at this and say, okay, we were using this strategy. How else can we make this strategy even better? So I'm about to show you guys how to actually use this strategy at a higher level than she even understands. I've been doing this strategy for a long time. So now that we have our daily set up, we have some basics here. Now for us, we don't use Bollinger Bands. We basically use the stochastic RSI. So to give you an example, if you go to a 6 hour, right? Once we would know that we're exhausted when the 6 hour starts to head down. So I'm going to create a box here so that you guys can see where we would know that once the 6 hour printed down, which would be right here, that would be where we would decide that the market has exhausted and it's currently in a less volume situation, which means shorts are more likely to give you a little bit more than they've been giving you. It's safer to short in this area because the market's finally slowed down of buying power, and this is more of an area where once the market starts to consolidate after being exhausted, more than likely you should get a time where this is probably where people are going to start selling to take profits because they're realizing that nobody is buying at the current price. So they have to reset the price to make it a valuable price on it so that people can buy it in the hopes to bring it back up to the previous high, which is where they make money. So you have to share the money, you have to share the dream, you have to sell your profits and bring the market down so that you can reset and buy again. So what we use is the 6 hour, and you can see right here the 6 hour printed, right? And what I mean by printed is you're not going to see this candle right here as it goes down. You won't see it until it actually prints, and it would be right here. Now, currently, that candle is still heading down. So we're going to keep it the way it is. And this is what I'm talking about right here. Right there is where the 6 hour prints down. You guys see that? Hit ones in the chat. She also said not to short or go long until it hits the middle of the Bollinger Bands. What's up, baby? Carol Burnett, what up, baby? George, what up, George? Jorge. All right, so we're going to also put this in here so you guys can have a little bit more information. So currently, we'd still be in the downward trend right now until the next candle prints, right? And that's where we're at here. So you'll see this here. I'm going to make it a little bit thicker, and we'll know there. Okay, so now that we have that, let's get into time frames of what she's talking about and executing a trade, right? So for this, we're going to get out of the 6 hour. We're going to head over to, let's start with a basic 30-minute, right? 30-minute is normally a good situation. And so this is where you can tell when she finds something that is going to an upward move, right? So I always tell you guys to keep the number 3 in mind, right? Like I told you guys in the last video, day 0, when we first started talking about the journey, is that we're going to operate and we're going to have steps in Trading 102. The Trading 102 journey is about taking the aspects of the general laws of trading and making sure that you're being taught the rules of trading. It's like the rules of walking or running, right? There's rules to this. And the most accurate thing in trading is there's always 3 moves. There's a move that happens, there's a pullback or a dip, and then the third move is confirmation of the move that it's trying to make. So there's always a move, a reverse move, and then the third move continuing, like a continuous move, right? So there's always 3. So anytime you guys make trades, you want to make sure that a move is you're entering on the third move. In the Elliott wave theory, that we call that entering on the third wave. Now the third move and the third wave are normally the same size of the first move plus more. So the third move is normally 60% of the time the strongest move of the trade, depending on market conditions, right? But it's more likely to be successful if you're trading the third move, because what that's doing for you is you're trading with the most people, the most sentiment, the majority of people, because just like in trading in another style would be people wait for a breakout, then they buy the retest, and then the retest goes crazy. Why does the retest go crazy? It's because there was a move. People put their money where the breakout was in limit orders, and when it comes back down to the limit orders, it then takes off, right? 1, 2, 3. That's how this works. Keep that in mind. You always want to make, and does that make sense, chat? Does that make sense to you? You always want to enter on the confirmation of the move, which is the third move, the third wave, the third option, right? So in this situation, it's kind of like this. So she would take a move, and we're gonna take a peek there too as well. There's a move, there's a pullback, and there's a retest of the trend, right? So there's a move, right? Make these a little bit thicker. There's a move, It then pulls back. Now, what she likes to do is put a trend line in here. And then when that trend line hits, she likes to short the trend line. So we might have to go to a 10-minute on here in order to really see the details of this. I think a 10-minute is probably, yeah. Because I know she said 5, 10, you could use it on all of them, but basically what happens is like, let's say here's a trade that's at the bottom of the Bollinger Band. It then breaks up out of reality. When it gets out of reality, there's going to be a trend line. It's going to look something like that. And the idea would be this, is that in this space, when it starts to go down, right? When it goes up and it becomes red and it starts to go down, it should bounce back to that trend and then make this final bottom move. So the way it's supposed to work is eventually it becomes red right here. It bounces down. The second move, meaning that so this is the 1, 2, 3. When there's a move to the downside, it's going to hit limit orders or orders that people put buy orders, which is going to cause it to bounce up. And then the people who didn't sell in the first pull down are going to wait for the second bounce to see if they can make more money. And then if it starts to get weak, then they will start selling anyways at that point to bring that down. And that's where what you're looking for is the pull down, the retouching of the trend line, and then the third move is this big move here. So you have the green candle, you have your first red candle, right? And then what happens is once you get that red candle down, you're looking for the bounce, right? So consider this like this, and this is what I mean by 1, 2, 3. So this is what we would call wave 1 or move 1, right? This would be wave 2 or move 2, right? Then once that move happens and it pulls back, we look for a bounce, and that bounce that we're looking for is basically it retouching this trend line, right? So at this current time, we wouldn't have any of these candles. What we would have is a trend line from that top and then we would have a trend line which would be like that. And then from there, we would expect it to come down, bounce. And then when it touches or breaks that trend line again, which would be here, that's where it would be. And I'm going to turn this orange because that's the one we're actually working on. When it hits that trend line, right? That would be where you would basically, based on your trend line, you're watching these candles come down, you would be setting your prices here. Now, when you put your price here, you'd want it to hit here and go down. And what you're looking for it to do when it comes down is you're looking for it to retouch the bottom of the trend line that was here, right? Now, and that right there is simply based off of that bottom candle. So now we have a trend sideways. Now, when this does go up, to find the bottom, that means when it makes its third move down, it should be twice the size of the pullback move, which is whatever candle goes down and then touches, when it starts to go up and it retouches this move here, will be measured out and then added to the bottom of the move to basically find the bottom. So you would be putting your buy orders to short on the trend line, and you wouldn't get it here. And this candle didn't make it. You see that candle didn't make it either, right? And then finally on this trend line, we get a winner because it finally hits the trend. And that would be considered the entry to wave 3, which would be here. Or the third move. Or move 3. There. Wave 3 or move 3. And now that would be the move that we would be looking for, right? And that would be the biggest move. Now what she's saying is, in order to get the information to say that you have hit a bottom so that you can then go long, is you would measure from the bottom of this candle to, I'm sorry, this first candle on move 1, you would measure the bottom up to the trend line, which would be here, right? Which would look like this. And down to the other trend line, which would be here. And we see that we have a 0.35% move, right? You guys see that? Now, what she's saying is, then you add that move to the bottom of that candle, and you would expect it to then come down and hit that move here, which would then basically qualify this move as a bottom. And then once you get to this bottom, this is where you would start to go long, because you have finished the entire move. Does that make sense, guys? Hit ones in the chat. That makes sense for you? All right, now we can see that the move 1 happened, move 2 happened, and move 3 happened. And when it hit the trend line, it did create Shogun. What up, baby? Sirens call. Hey, what's up, Wiring? The winery, baby. Hey, where's that winery at? Where's that winery at? All right, we're back. Our winery is in Corpus Christi, Texas. When are you going to send me an invite, man? I got to come down there, man. You got to go. When are you going to send me some wine? You got to send me some wine so I could taste test it. Do some videos on it, man. All right. So we can see that we get our third move, right? And this is what the move is expected to do. Now, this is just basically that, and we do a lot of, so you're in Texas, right? So you should recognize Triple D. Right? So this is our hat company in Dallas. So you way down there, you buy the border though. You buy you're down there by Selena. The amazing Selena. So this right here is wave 1, wave 2, and then your target is wave 3, which would be this lower area based on the measurements of the top of the original move to its bottom. And then you would just measure it top to bottom. You would just put it there and measure it out, which would give you this section here, which means your target would be here, right? So that is basically the trade through this system. Yeah, downtown Corpus. Yeah, but real talk, man. DM me, man. If you want to send me some wine, I'll definitely do some tasting for you. Because you know right now we're up in Vegas. So for Vegas, we always go to California. We got all the wineries out there, but I like to support our people, you know. You know, support our Texas people. So that's basically what this is. Now that we have this strategy, we can apply this strategy on the 10-minute time frame and basically use this to catch the pullbacks. There we go. We're back. All right, I'm going to cut the music off because we need to keep this clean internet connections. So this strategy allows you to do a 10-minute pullback and then find the biggest pullback. Well, yeah, the Dow shorts. The Dow short's happening right now. So we can't. So that's the thing about when you're teaching, guys. You can't always get into trades. But on this bounce here, I'm probably going to take this as long. All right. So that's the gist of the move, right? So it's a 10-minute move to find a pullback, then catch the pullback's resistance, and then catch the third move down and target a short. And then once that happens, to then put yourself in a position to know that you're now currently moving into the next position, which would be getting into the long after this big pullback, which would put you somewhere here on this candle where you would be riding up this long move, right? So that is what we're going to work on, execute, and show you guys how to do consistently. This is a very simple, easy strategy. It's the 1, 2, 3. It's what I've been teaching for 10 years. It's the easiest way to teach people how to be successful. You don't need all the crazy bells and whistles. And I'm going to show you different ways to look at something versus the Bollinger Band, because the Bollinger Band is actually not the best way to do this strategy. You need to use the stochastic RSI. It's 10 times better. And I will show you that as we move on, and so that you understand why the proper way to do my 1, 2, 3 strategy is actually with the stochastic RSI, not the Bollinger Bands, right? So here's what we have. Here's the execution, and then we could have went into a long position after that and end up in this giant long move, right? Now, that's the trade. So now let's go over here and let's kind of like find it in current conditions, right? Because now that we understand how this trade is done, did everybody understand that trade? Shogun, what I bet. Don't forget to follow, guys. Don't forget to follow. What the? All right, so guys, hit ones in the chat if that makes sense for you. Hit ones in the chat. Don't forget to share the live. You're going to want to make sure you follow right away right here. This is the real account. Don't follow later, because then you end up with the fake accounts, and then you'll get asked, did you take our course today? Listen, the 102 trading journey, you can only get it inside of our Discord, and we'll never email you or text you. We'll never send you a message to ask you to join it, because personally, we don't give a shit if you do or don't. If you want to make 6 figures and retire, then do it. If you don't, then don't. I don't really give a shit, to be honest with you. Now, I'm going to focus on this by being a brand new trader. I'm going to show you how I build strategies and how I would execute making 6 figures or hitting my goals of being a trader. And that's what I'm going to do right now. Okay, so let's move to the current conditions so that we can just focus on what's happening now, right? All right, so first on the overall, I would use the 6-hour time frame. And if you don't know how to get the 6-hour time frame on TradingView, just simply go Google how to do time frames, right, which is here. And then you can find out up here, if you scroll all the way to the top of your, I don't think it has that in there. Let's see. Let me move this over a little bit. So that's in the page. All right, there you go. So you guys see the time frames right here, right? If you go to the very top, there's a thing that says add. There's a little plus line that says add a custom interval. So you can add anything to minutes, hours, days, weeks. I don't know what you would add to weeks. Maybe like 2 weeks. Months, you can add 1 month, 2 months, 3 months. Days, you can add, hours, you can pick your hours. So you would go to hours and you would simply add intervals of 6 hours and you would add it. So if I wanted to add an 8-hour time frame, I would hit 8 hours. You see right here, I don't have it. I only have 6. But then I would hit it, and look, now I have an 8-hour time frame. Very simple. So you go to the 6-hour time frame, and once we go to the 6-hour time frame, all we're going to do here on the 6-hour time frame is what we already did, is go over to our stochastic RSI, and we will find out whether or not the 6-hour is heading up, right? So you can see right here, the 6-hour was heading up from here to this purple box, right? So the 6-hour was heading up from there to the purple box. So basically, Doge had a price of 7 cents all the way to 9.3 or 9.4 before it became not bearish, but before it became exhausted to where there was the buyers, all the buyers have pretty much ran out. The only thing to do now is eventually sell some movements down to make it a valuable commodity again, where people can find a place to do parallel channels or clusters. We call them clusters, but basically buy up and down, and make money on short moves from the bottom of the top, bottom of the top, bottom of the top. So parallel channels, right? So that's the scenario that we kind of have there. That's what we're looking for. And you can see right here, that's what the chart did. If you go up here and look, you can see that once the 6 hours started heading down, you ended up in this cluster right here. And I'm going to turn this yellow, and you can see right there in that yellow box that price started going up and down and created a top and a bottom, which basically is a cluster, a parallel channel, or what they call consolidation, where it goes up and down and it starts to find that, right? When you use Bollinger Bands, you don't get that type of detail, right? You're just kind of like, you're either in reality or out of reality, but maybe the way you think, or the way you, in your head, how it's put together, maybe that makes more sense to you. Because remember, we want to take the strategy here and look at it multiple ways, and then you can rebuild it and do the Trading 102 reverse engineering journey and strategy, which is take a strategy, tear it apart, see how it works, rebuild it so your brain understands it, so that you can execute it and do it perfectly with ease, because you have the confidence, because you built the trade. Okay, so now we have the consolidation area here that's happening, and that's basically what we have, that we've been going sideways. Now, just because the 6 hours going down doesn't mean you're going to have a complete dump, because market conditions change all the time. In this scenario here, there's value and more people are buying and holding instead of buying and selling like they've been doing for the past 6 months. This is actually the market starting to improve its volume, and it's starting to get money into the market, a little more money. But that's where we're at. So here, so let's dig into here. So right here, we start to head down. Here's our 2 hour down, and that allows us to basically look for our shorts. So that's all set up. We know based on our 6 hour that we're currently in a downtrend. You can see right here, the RSI is still heading down on the bottom, right? Let me put that up here. So you guys see right here, the RSI. I got to put this in screen for you. There you go. Let me move that up. Okay, so you see right here, the RSI is still heading down on the 6 hour. Right there, you see that? Right here, you see? The stochastic RSI is still heading down. So we're in a downward trend. Doesn't mean it's going to dump. It just means that shorts are going to pay off more. And it's definitely, shorts are the current reason, or the current market condition that you should be looking for. Meaning shorting would be the better option than going long currently, because the market condition is the buyers are exhausted and they're just holding, and sellers are going to be eventually want to take profits somewhere here, and there's going to have peaks that will drop down and create percentages and movements that, based on your trading strategy, and which is basically your leverage, you can create opportunities to hit trades over and over and over while the trade goes sideways, or while it's in price, creation and discovery and all that, right? So now that we have all that set up, we can go back to the time frame that we're focusing on, which is basically the 10 minutes. So now let's get to the 10 minute. And then we could take a look at the current chart, so that we can see these shorts that we've been doing all day. I don't know if you guys have been paying attention. If you're not in our Discord, it is free. But these are the trades that we've been knocking out all day, all week. I'll scroll up here so you guys can understand. Just executing the Trading 102 system, keeping it super simple so that you can rinse and repeat without overthinking. We have all these things happening, right? So we 33%. Here's a long, 47%. Here's a long, 33%. Here's a short, 20%, right? We're always going to go for 15 to 30%. And then if it runs higher, it's great. Like here's 45%, right? That's a short, right? Here's another short, 25%, right? Then we go long. Here's a 65% long, right? So we go up and down with the market. So let's go back over to the Doge. we've been going up and down on Doge all day long here. It's so crazy to look at the chart with Bollinger Bands, because I don't use Bollinger Bands, but we have a better system than that. So, but I guess when you're learning, anything that makes sense could help. So basically here, without the Bollinger Bands, you can put in what's called a parallel channel, which isn't that hard. You go here, and then all this is that once there's a second move, right? So let me explain that to you. So you can see here that there's a short move, it bounces, and then what we say, or we'll call out in the Discord, called short the bounce. So when it bounces, this is where you would enter on that blue, and then you would short down to here, and that's basically shorting the tops, shorting the bounces, right? Now, once that happens, it's going to bounce up, and then that's move one. It's going to pull back, and then when it pulls back, you're going to get an entry there, and then you'll ride that entry up to here. Now, theoretically, the way it's supposed to be is this first move should be measured, and then add that first move, double it to itself, which would put you about here. When it pulls back, you would expect it to make that move up to this area here. And I'm going to show you how to pull those targets. But do you see how everything has a 1, 2, 3 move, and you're always going to be entering on the third move? The third move is always going to be confirmation of conditions, supports, and resistance, right? So what I'm doing here is that there's a move down, it bounces, right? You guys see that? That makes sense? Hold on. Let me put it in a frame for you. All right, so right here, okay, so it's pushing up. Now, when it makes its move, which would be the dump, that's move one, it's going to bounce to move two. That's where we would catch our shorts. And then what we're looking for to confirm that the movement is kind of doing whatever it's got to do would be the third move, which would be from here coming down. Now that would be the bottom of the channel right there. Now when it bounces, it would create a top, right? Which would be here and a top here, right? Like those are what you're seeing. But what you would do here is you would go here and get what's called a parallel channel, and you would simply put it on the bottom of that candle, draw it out, and then you would pull it up to the top of that first candle. I'm gonna make these big. I'm gonna make them red, not red. Let's go purple, right? So now that is basically what we would call right here a parallel channel. We call it a cluster, but all it basically is consolidation from the bottom of an area of support to an area of resistance, which would be when it rejects. And that's all it does. And it goes top to bottom, top to bottom. Sometimes it breaks out a little bit. And these are the areas where you would look for, and just so you guys can see, it goes from bottom to top. It comes down, back up to top, back down. It bounces the top, back down. It touches the bottom again. It bounces up, comes down, touches the bottom again. Then it goes back up to the top, right? Pulls back. Then it goes through the top. Now, this is where we're currently at, where normally what we would see here is when you see something happening here, this is called a breakout, right? So normally in trading, one of the ways that people trade is going to be this. they would like to see this break the support line, which is this line here. And when it breaks the support line, most people are going to, when it pulls back, they will put their entries on the previous resistance to basically think it's going to bounce here and go up on a move, right? But this move, or this strategy, which is the breakout retest entry, if your skill level, which means you don't understand that this pattern or this strategy is only right 3 out of 10 times, and 7 out of the 10 times it will go down all the way to the middle of the channel or to the bottom of the original support before it bounces up. And if you don't know how to read volume, price action, and have a way to understand when to enter this trade correctly, and you just put a limit order on the resistance area hoping that it does what it does, you're going to wake up to liquidated trades. You're going to wake up to trades that hit your entry and then kept going down and hit stop losses. And you're going to find out that you're going to lose 7 out of 10 trades. Now, which is okay, because you can lose 7 and 10 out of these trades as long as you're doing the trading 102 universal rule, the law, which is losing only half of what you averagely win. And you really want to get to the point where you're not really losing that much. You want to shave more off of that. You want to get to the point where you're losing half of that, and that would be your stop loss. So what would happen is, if you did this trade and you did the breakout and you set your limit orders to the resistance to bounce up and do what it's supposed to do, which everyone thinks it's going to do, what would happen is you would set your stop losses up. So let's say you averagely win $100, which means you can lose $50 on your losses. You cut that in half and you put it at 25 bucks. So when you set your limit order on the resistance, your stop loss is set up to only lose $25. What would happen here is, out of 10 times, if you follow this particular trade without adding anything else to it, just kind of like the breakout, putting the limit order on the retest and then hoping it runs, you're going to lose 7 out of 10, which means this. If you normally win 100, your stop loss would be 50. Cut that in half, means that you're going to lose. You put a loss that if it doesn't go your way, you're only willing to lose $25. That makes sense? Hit ones in the chat. So that means 7 times you would lose $25. So that means you would lose $175 by trying to execute this trade with a very low skill level and not having any other ways to ensure or to make this successful. Just doing a breakout, putting in a limit order on the retest, and letting it do what it does. 7 out of 10 times you're going to lose, which means you're going to lose $175. Now, what that means is, when this trade does bounce and go the other way, this trade needs to make $100. So how we can kind of test this is, when you make this trade and you do it, that means that if it does do what it's supposed to do and it does come down and it does bounce, right, and it does go up, then based on that, you would have to make the 3 times that it works for you, you would have to make $100. So let's say that, this is where your trade structure is set up to how much are you trading. So if you're doing a $1,000 trade, that just means that when it bounces, it only has to move. Let's say we're doing a 10x leverage, it has to move 1%. If we're doing a 20x leverage, because remember, a multiplier, which is your leverage, is multiplying times what it moves. So if a trade moves 1% and you did a multiplier or leverage of 10%, that means the 1% is now multiplied times the leverage number that you picked. So if you pick 10, that means if you would have to have a 1% move, which would be equivalent to your multiplier of 10, a 10x leverage, which would make your 1% times 10, meaning 10%. So that means if you had $1,000 and the trade hit the resistance and it went up 1%, you would make your 10% needed, which would give you your $100. Now, to make it a little bit easier to help you hit that target, you'd want to be using a 15%, which means you only have to go to 0.75%, not a full 1%, or you lose a 20x leverage, meaning that you only go half of that, which is a 0.5%. So to give you an ideal, let's say that it hits the 9227, and if you were doing a 10x leverage, you would need for it to bounce up, and you would need for it to hit this target here. If you did a 15x leverage, you would need it to bounce up, and you would need for it to hit the level here. If you did a 20x leverage, then you would need it to go a 0.5%, because a 0.5% times 20 is equivalent to 10 with a 20 multiplier, 20x leverage. You would only have to bounce up to here. So based on this, if you entered this trade here and it came down and it hit the resistance or the previous resistance line, which is basically the 0.9227, then what it would have to do is, based on that, it would have to hit these marks, which would be your 10x leverage, right? 10x leverage, or is this one up here? Yeah, that's 10x. Or it would have to hit your smaller one, and I'm gonna put this on top, or this would be your 15x leverage, like that. Or you would have this lower one, which would simply be a 20x leverage. Okay, so from this orange, when it hits, these are the targets. If you did a 10x leverage, you'd have to go to this line. So you'd have to get up to this price here, 9315. If you did 15x, you'd have to get here, 9294. If you did 20x, you'd have to go halfway up to 1%, which is the 10x. You can go to 9272. But these are three very simple options in order to be successful. It's really that easy. So now when you build your trades based on your skill level, you're going to basically be picking these trades. So we're in that long right now. Did you guys get in that long? Yeah. So we caught that Doge bottom, and now we're going up. Did we get in both of them? Let me see. That's the only bad thing about when you're teaching, is that you can't get in all the trades correctly when you need them to be. Okay, so back over here, let's get back to our chart, right? So these are your options to your 10x, your 15x, or your 20x. Very simple. Now, what you have to understand too, so you don't want to FOMO, you just have to do your steps. So now that we have our 10x, our 15x, and our 20x, what you can do is, if you were, let's say, deciding that you're setting your order up for the pullback resistance, which would be pulling back to this purple line here and creating a resistance line right there for the entry right here, what you basically would have is you would be able to measure out all the things that you need to do. So for instance, just like we have a 10x, 15x and 20 to the upside, we also have the stop loss. So just to kind of give it a thing, if we were doing a 10x and we are allowed to lose 50% of the $100, and we cut that in half, we say 25 bucks. That means if we did a 10x leverage, that means that if we went to 1%, which is down here, that would be equivalent to lose our entire $100. We cut that in half, which is 0.5, which is here. That would be us losing our $50. And so for us, we'd only want to lose 25. So we would have to go to here, 0.25. In that ballpark. You can give yourself a little more room. 0.6 is fine. This right here would basically be considered our 10x stop loss. And we're going to do a 15 and we're going to do a 20. So this one right here, I'm going to go ahead and put in here. This is your 10x stop loss. There we go. So that means that if we did a 10x leverage from this entry point, we could come down to here, and that would be our $25 loss if it went there before it went up to our 10x area up here. So we enter here, it bounces like it's supposed to and goes to here on 10x, and we are successful. If it doesn't hit this and it falls down to here, which is right here, which it did, then we're unsuccessful and we lose 25 bucks. Now, if we're doing a 15x leverage, that means we don't get this bigger cushion, right? Which would basically be more like 2-0, which is right about here. That right there would be the pullback for 15%. And then for 20%, we would only be able to pull back half of 25, which is 13, something like that. So that would put us here for our 20x leverage. And I'll open this up a little bit so you can kind of see. So this is your 10x stop loss. This is going to be your 15x stop loss. And then this one up here means that we go higher leverage. So by going higher leverage, we close that cushion because we don't have as much because we're taking more risk with more leverage. And the risk is basically if it goes down further than we anticipated, our stop loss will hit a lot faster on a 20x leverage than it will on a 10x leverage or even a 15. And that right there is basically where you're going to learn to have skills. And the skills are basically going to put you in a position where all you're doing is you're learning how to enter correctly and where your entries need to be in order to make sure that you don't hit your stop losses, and you also get yourself in a position where you're getting the best entry, right? Because at the end of the day, the best entry will always be the most profitable entry, because if you enter at the best possible time, it's easy to hit your target to be successful. Okay? So that's kind of like how when you build a trade and you piece it together, these are the rules of your 10x, your 15, your 20, and these are your stop loss. You're basically, this right here is your entry. Which would just be the top of the channel, the purple line. And then your stop losses on the 20x would be here. A 15 would be here. And then on the 10x, it would be here. So these are the three areas. 20x stop loss. 15, you get a little more cushion. 10, you get twice as much cushion than a 20. And that allows you to basically, when you first start off, you're probably going to want to do a 10x leverage and learn how to enter a little bit better so that your 10x has room to grow, or start off with 15x leverage so that you get a little more stop loss cushion so you don't stop loss as much, and then learn how to get better and greedier entries, right? And like I said, your entries will get better based on your skill level, learning how to enter, right? That's really what this comes down to. So now let's go to where kind of what this current strategy. So I'm gonna run this strategy out real quick here before I move on. So chat, hit the ones in the chat, right? So we got about 10 people in here. We want to get up to 20, guys. So if you got to share the live, you got to share the live. I want to get up to 20, 30, 40. We should have about 300 people in a couple weeks learning this simple system so they can execute and be profitable, right? I want in the comments, yo, VC, I went and did your strategy, and by watching your lives, I'm learning, I am now a profitable trader. I want that inside the comments. I want to see that. Okay, so now let's take a look at this overall moment here where what we would be looking here is for basically the trade that we're looking for here, right? So, and this is where you're also going to see when, by following patterns and strategies and repeating them, you will understand that they do not work the way they're supposed to work, or the way that I won't say the way they're supposed to work, but they're not going to work the way that makes you profitable and winning of the trade. They will only do that 30 to 40% of the time. The other 60 to 70%, there will be some type of, mismark, a further dip, all those things. Or if you're trying to short, it'll be more of a pump. But 7 out of 10 times, it will not do it won't run the pattern that you're looking to run. It will do something different and you will lose, right? That's why having the stop loss on a percent, like a percent of money, the way you're supposed to, so that when you do win, you're winning twice or 3 times more money than you lose, right? And then when you have that scenario and you learn to actually get into trades properly and you enter better, then what happens is your gains become a lot faster, because and what I mean by that is, so you enter a trade, it goes down 30%, then it goes up and it barely gets to your target, right? In reality, that 30% that it went down, had you entered correctly and entered at the 20% line, and you learned to enter down there, and it only went down 10% before it went up. Now, originally, when you got in, it fell 30%, but it only went up 20%. But if you would have got your entry correct and got in at the negative 20 area, and that's where you put your actual entry, when it goes up to that 20% earlier, it now has an extra 20% that you took it from being negative or a pullback, and you turned it into profit by entering greedier lower. by getting that better entry, you've now, instead of getting a 20% trade, you have created a 40% trade, which allows you to get at least 30 to 35 or even target 40%, which is twice as much as the 20% that you needed. And it is 4 times as much as the 10% that you need to learn to do every single time with a very big bag. So if you had $10,000 and you made 10% on $10,000, that's $1,000. You can make that trade 4 times a day. You do the math, right? So that is how, and what we're doing here is developing a process that we can do over and over, make 10% on 1,000. So this way we're making our $100, and then get up to where we're trading 5,000, which is basically $500 a trade, or $10,000 a trade. Make 10% and take home $1,000. I mean, if you're making $500 on a trade, which is only a $5,000 trade, which is your goal, that's where you need to be in 3 months. You take that $500 and you do 5 trades a week. That's 2,500, right? 56 weeks a year. That's 140,000. 6 figures. Almost 200,000, right? But that's what we're doing right now, is we're walking through the process of how to make this happen and do it every time you trade, right? So now let's go look at this. And now that you understand that patterns or trades that you're expecting to happen will only happen 4 out of 10 times, okay? This should have broke out, pulled back, retested, and it should have went from here up. Instead, it continued down and it hit the support zone right here. Then it started to run. And where did it go? Right back up to the resistance. Now, if you played this correctly and you got that greedy entry off that lower support, that which has been doing all last couple, literally all day, that was a 2% move that I've been trading all day today. I've been buying the support and selling the resistance, which just hit again. It's a 2% move, which means if I'm doing a 20x, and you go look at my charts here, you can see I've been making 40 to 60% on these trades all day, because I'm trading that 2% move, and I'm just taking advantage of what the market is giving me, right? Here's another trade right here. This is the trade I just entered when I was talking to you guys, and you can see right here we got 21% here, right? So we just made $100 following the system that we're showing you right now. It's very simple, right? So now imagine that's just a small account. That's a $300 account. We normally trade with 3,000. So that the $100 would be times, do the math, right? So we made 100 on that with $300. If we did 3,000, what we would made? We'd have made our $1,000, right? So this is why you guys have to understand. So a greedy entry is like this, okay? So it's kind of like when you decide to enter. Okay, so Shogun, let's say that you're going to do an entry and you're going to decide that you're going to enter on the pullback, which is the resistance, right? So 09226, right? So you're deciding that when it pulls back, you're going to enter off the resistance like you normally do, right? Or that how the pattern would basically tell you that you would do. Does that make sense? To become a greedy entry, instead of doing the resistance up here, you get greedy and you move the entry instead of 0923, you put your entry on the middle support area of the channel. Let me get rid of this. You do the middle support area of the channel. So you come down here and you say, you know what? This area here, you see this purple line down here? You decide that you're going to go down, instead of the resistance, you're going to go to the middle of the channel, which is 09134. Does that make sense? That's a greedy entry, because you're moving your entry from up here down to here. Because what you're trying to do is you're trying to make an extra 1% on the entry. Instead of entering off the resistance, you're making a decision to say, I'm going to get greedy and I'm going to want it to go even lower if I'm going to make this trade. If it doesn't go all the way back to the middle and trigger your entry, then you just kind of move on and say, it didn't hit. It doesn't matter. Because remember, if you didn't get in the trade, you didn't lose the trade. Your entry was just too greedy. But by doing 3 greedy entries, they will pay double than their normal trade, which will make up for 3 losses that you would take if you did get in on the resistance and it did go down further. So it's a way to protect yourself from losing trades, but also it makes it where your trades become worth more money because you are entering greedy. Yeah. The channel really isn't the big part of it. The channel is just kind of like an ideal of like if we had a channel, right? I'm just using it here because based on here, we have a channel and we have entries. We have the top of the channel, which would be the pullback at 0.924. The middle of the channel would be 0.9133. And the greediest entry, if you decided to get super greedy, based on your skill level. And when I say skill level, meaning when you use other tools to say to yourself, you know what, there's really not a lot of volume or price action, and it's been hitting the bottom of the channel even more, I'm going to get super greedy and I'm not going to take the middle of this channel. I'm going to get super greedy and I'm going to go down all the way back to the support. And I'm going to do the support entry because based on my skill level, I can tell that the market doesn't have volume enough to hold the middle of the channel. So it's probably going to go even further. Now what you did was you have created a 2% move. So instead of entering up here, you are entering way down here, which means going up to the entry that you originally were going to start, which would have been up here. Instead, you're entering down here. What you created just by being greedy is you have just created a trade that right here, you can see the number right there. You made 2%. You made 2%, and all you did was get greedy on the entry. So now if it goes up even further like you were expecting up to here, right? So instead of you having an entry here going up to here making a 1% move, you have the additional 2% by getting super greedy, and now the move is worth 3%. So now you have made 3 times the trade. So you've made 2 extra winning trades by simply changing your entry to a greedy, into a super greedy entry. That makes sense? Pretty cool, right? Now, what this also is going to do for you is keep in mind when you first start trading, you're going to lose 7 out of 10 trades. So by doing a greedy entry or a super greedy entry, the losses that you normally take is you enter too early and you got stopped out. So by doing a greedy entry, you are taking away that stop loss and you are doubling the stop loss, giving yourself a higher percent of not being stopped out. So which means when you normally lose 7 trades, by moving the greedy entry down, you're probably going to miss 1 or 2 of those losses and turn them, instead of losses, you're going to turn them into wins. So instead of losing 7 out of 10, now you're only going to lose 5 out of 10. Then as your skill level gets better and you can figure out when you can be super greedy, now your 3 wins, which have now become 5 wins, are going to have 1 or 2 times that they become 2 to 3 times bigger winners. So in reality, let's say 2 of those trades, that 2 out of 4 become a triple greed trade. That means you have made 2 times more than you should. So it's like winning 4 more trades. So your 4 or 5 winning trades are now equivalent to the gains of actually winning. Instead of 3, it's like winning 6, or instead of 4, it's like winning 8 trades. So you have essentially removed losses from 7 to 5, and you have created wins from 3 to 5. And by one of those trades winning 3 times more than it should, your 5 trades are now equal to 8 winning trades versus 5 losing trades, right? So let's do the math. So if you have 8 winning trades at $100, that means you won $800. And if you only have 5 losing trades of $25, that means you've only lost $225. So now you are up $575 instead of $450. So now you've won 30% more than you normally win. And as you start to work on your skill level, you start to get better at your entries, and you start eliminating losses, and you start increasing gains by entering correctly. Does that make sense? Hit ones in the chat if that makes sense. Welcome in, guys. We got 13 people up in here. So what we're going to do here, it's now 10:45 a.m. Eastern. This video here is going to be on my YouTube channel, which is simply VC Crypto Nation, and it's posted in our Discord for free. Plus, you have the very first video that we started this journey. So what this journey is I'm going to basically get rid of all the knowledge I have in the way I trade. I'm going to become a brand new trader. I'm going to act as if I'm you, and I'm going to go to YouTube, find strategies, and I'm going to build trading strategies, and then I'm going to execute trades, and I'm going to take you on the Trading 102 journey, where I show you exactly how to hit my goal, which is 100K a year, doing 10 or 5 trades a week, averaging $180 a trade or $350, whatever it is, and how we do it, how to find a trading strategy and develop it into my own personal strategy so that I can execute it, make more money, make greedy entries, and basically operate off of the fact like a normal trader, which is win 3 out of 10 trades and lose 7 trades, right? Losing 7 trades. And I'm going to show you guys how you can become a profitable trader instantly by following the Trading 102 universal law, which is simply losing half of what you averagely win, right? So this is an entire journey that we're about to take together. I'm going to wrap up this video here, but you go watch day 0, which is the first day. This right here is day 1, right after day 0. And this is day 1. So this is how we went to YouTube, found a strategy. I explained the strategy. I showed you the very simple thing that I've been teaching for 10 years, which is the 1, 2, 3. I explained how to create and how to look at it. I explained to you that every strategy that you find will always only work 30 to 40% of the time. I explained to you how to eliminate those 60 to 70% of the times that it doesn't work and turn those losses into wins to increase your skill level. without doing anything different, just doing a greedy entry or a super greedy entry. And that's the beginning of the journey. Now we will move on and teach you more things to improve your skills. But that's what we just finished doing today. Now I'm going to hop off here, go have lunch, go swimming, and enjoy my day. Thanks a heap, baby. You're welcome, man. My goal here is to make you a successful, profitable trader, so that in my comments you're posting, yo VC, I watched your live the other day and now I'm doing some trades based off what you showed me, and I am becoming a profitable trader instantly. And I look forward to watching more lives with you. I will see you at 9 a.m. Eastern on Monday, Wednesday, you know, every Monday and Wednesday, right? And we'll probably do even more days, but I just want to have something that I know I can show up for you on Monday and Wednesday. But we'll probably do Monday, Tuesday, Wednesday, Thursday, but Monday and Wednesday for sure. But that's what I want you guys to do. And we're going to look at that too, big boy. We're going to look at your sorcery. And you gotta drop your user ID number. You got your BitNex account set up? We just gave out $20,000 in bonuses. All right, so people got, you might have got it. Did you check your rewards? You might have got some rewards. Go to the Discord and put your user ID number, bro. Your BitNex ID number. So there's a lot of things that we can do for you guys to teach you guys how to do well, make more money. But we're going to take you on this journey step by step, as if we're a brand new trader, and we're going to do the same thing that you guys do. Look at videos on YouTube, look at different strategies. But I'm going to teach you how to reverse engineer it, to break it down, make it your own, execute it so you understand it. Get it to where you can confidently do it, or realize it doesn't work. And then I'm going to show you how to find out why it doesn't work, so that way you don't keep making the same mistake because you just don't have the knowledge of why it doesn't work. So that's what we're going to do, guys. So Monday, Tuesday, Wednesday this week, we'll be on at 9 a.m. Eastern. And we're going to teach you guys how to execute this journey that I'm doing. I'm gonna do it, and then you guys can just take notes. And at the end of this journey, when we get to, you know, the holidays in the next 4 months, we're gonna flip $1,000 into 40 grand. So that way we can, you know, probably even a little bit more, but we want to make our $100,000 every 6 months. So welcome to the journey, guys. Don't forget, this is the only account that's going to talk to you. Make sure you follow right now and go watch the videos that we're posting and comment and like them. You know, that you saw the live and you're excited, and you'll see me at 9 a.m. so that I know who's active and I can spend more things and help you guys out. And the algorithm will notify you when I'm live. So I'll see you guys tomorrow at 9 a.m. Eastern on TikTok. And let's focus on that, guys. So get excited, man. You guys take care. I'm going to end this video. This video, like I said, is being recorded. It will be inside of my YouTube channel, VC